All right, so let's talk about the copper to gold ratio. Now, this is an important metric because when we think about gold and we think about copper, they pretty much they have two opposite sentiments. For copper, it's known as Dr. Copper, which basically means when prices rise for copper, generally the world economy is probably going through an expansion. If the prices are falling, we might actually expect to see gold prices rising relative to them. And in that sense, things aren't going so well in the global economy. So, as we see here, we have the copper to gold ratio. And a quick way to look at these graphs are whatever's in the numerator. If the graph is going up, that means the numerator is doing better than the denominator. If the graph is going down, that means the denominator is doing better than the numerator. That's a nice quick way that I like to look at these graphs. So, basically, since 2020, the bottoming out of it, which makes sense, right? We started to see copper really take off relative to gold. Remember, this is copper in the numerator and gold in the denominator. But we hit a peak in May. And remember, I always refer to this actually, because that's right around the time when we start to see these delta blips pop up in the news. And right around that time, things took a quick halt and reversal. And we started to see things go more into the direction of gold, especially back in June. Prices got really high for gold, but then things started to kind of mellow out a bit. And we're kind of in this range here for the copper to gold ratio. Now, this is really interesting given the fact that when you think about copper, 50% of it in the world is bought by China. So if something's wrong with copper, you can easily make an assumption that something might be wrong in China. And obviously, in the manufacturing sector for China, things have not been looking good, pretty much particularly since November. We hit a high in November, and then things have just been slowly coming down. Things did pop back up in April and May of this year, and then things started to retreat again. Now, there's a lot of things happening in China that I don't know is true or not. They've been saying that cases have been pretty low, but then when you read some of the reports about manufacturing and the Delta variant, it says like it's been having a pretty negative effect on hiring in China for manufacturers. So that's why things have been slowing down. And then commodity prices are high. It's just a very interesting read when you kind of look into these documents. But overall, what you can say is that China's manufacturing economy, which is, they're the manufacturer of the factories of the world, it's pretty much not doing that well. And it got to a point back in August that it was pretty much dancing on the line of recessionary territory. In September, it's bounced back to about 50. 50 on the dot, actually. But let's see exactly what's going on here. The Caixin China General Manufacturing PMI rose to 50.0 in September 2021 from 49.2 in the prior month, and beating market estimates of 49.5. New orders rose for the first time in 3 months, and buying levels returned to growth while output fell at a softer rate. Meantime, export sales continued to fall while employment dropped for the second straight month and at a steeper pace. On the cost side, inflationary pressures surged, with input prices rising the most in 4 months, its 16th straight month of increase amid reports of greater energy and raw materials costs. This in turn led to a solid increase in prices charged. Looking forward, sentiment strengthened to its highest since June, underpinned by forecasts of an end to the 2020 issue, planned company expansions, rising customer demand, and new product launches. So they're pretty much dancing on a knife's edge, but it looks like what they're predicting in the future is that things really should begin to turn around. Now, this is good because it looks like the same thing might be happening here within the United States. So what does that mean for the copper to gold ratio? Well, let's also draw a conclusion about silver as well. If China's manufacturing economy feels confident about the future to the point where they're saying we might be done with, the issue, um, copper might be doing well. And the knock on effect is that possibly silver might be doing well as well. Gold may actually kind of peter out a little bit in the future. So if China's looking good, that is a good forecast into the future. But I would still say right now we're in the September slumps. The October effect is pretty much happening. So let's wait it out and see where we land. But as of right now, the future, at least according to China, they say that it looks pretty bright. So let me know what you think. Do you think that things are going to turn around? Let me know in the comments section below.